Hey, what's up, guys? Houston here. Look, if you're looking for the best credit card consolidation loan, then I probably would not go with PenFed. I would probably not go with NASA. Now, I probably would look at Navy Federal, and that's only if I'm going to be able to do the Navy Federal hack, okay? And the Navy Federal hack is basically where you qualify for a credit card. Say you qualify for $10, $15, $25,000 credit card, okay? And so what you do from that point, you would request a prepaid card from Navy Federal, okay? And with this prepaid card looked at as a debit card, you can transfer the balance from the credit card over to that prepaid debit card, and then you can use that like a regular debit card and stuff, and you can use that to pay down your other balances. All right, that's the only way and the reason that I would use Navy Federal. Other than that, Navy Federal, PenFed, NASA, because their restrictions on the DTI, debt to income ratio, is so low. Their DTI is usually between 50 to 55%. Now, PenFed will go up to 60%. However, I still would not approach them. The top lenders that you want to approach when you have a high DTI, okay, and I'm going to also tell you of a lender that I'll go to as soon as I get down my credit card debt to give you more leverage. But when you have high DTI, you want to look for the lenders that offer DTI up to 75%. Okay. Now, here's the thing about it. With those type of lenders, difference between them and the credit union is that they may charge fees up front. Okay. So they may charge up to 10% fee up front. Now, they'll give up to $50,000. Most of them, they say they work with a 560, 580 credit score. And I'm going to tell you who they are. And I don't know if you all applied for them or nothing or anything. However, you have to understand with these here type of lenders, not only is the fees, however, you also have to make sure that you have a credit file for at least 2 years old and have at least 1 to 2 accounts on the credit file for most of these. Now, the first one we're talking about is upgrade that goes up to 50,000. Okay, 75% debt to income ratio. All right. The thing about it, you also have to understand, like when you go over a certain threshold. So say that you requesting 25,000. Now, if you're not a regular W-2 employee, you cannot produce those pay stubs, right? So that's the reason why some people may get denied. Sometimes you may get denied because I think they may not service like maybe 1 or 2 states. But other than that, they should service everybody. Then you also have Avant. Avant goes up to 35,000, but it's 70% DTI. Okay, that's the reason why I tell you guys, don't go to the banks when you have high DTI. Do not go to the banks. Do not go to the credit unions because you're going to get turned down. All right. Now, another thing that's a big factor in this, in terms of having multiple loans currently already open. All right. So if you already have multiple loans open, these type of lenders may turn you down as well. Okay. And that's something that people, they're like, oh, they turned me down. And you don't know why. Well, the reason is because you already have multiple loans open. And so the only way to get around that, you have to turn to tribal lenders in order to get around this. And so with the tribal lenders, most of them, they only go up to, I think it's 5,000. Now, with low credit finance, they are a platform. They go up to 50,000. However, also considering the interest rate, a platform versus a direct lender, okay, that's something else you have to consider. If it's a direct lender, it's going to be less paperwork. So in terms of direct lender, like a Rise Credit or Uprover, those are the type of direct lenders. Credit Fresh, Credit Cube, those are your direct lenders. Less paperwork. You have Max Personal Loan. Max Personal Loan, tribal lender up to $50,000, direct lender. Okay. Now, just keep in mind with these type of lenders, they're not servicing all 50 states as well. Okay. So that's the thing you have to understand. However, with those type of lenders, you have to expect for their interest rates to be much higher than your traditional credit unions and banks. So that's also something that a lot of people don't want to accept. However, when you have challenging credit, okay, and you have not been paying your credit cards, you don't pay people back on time, and then you expect for other people to give you money, then you can only expect for them to charge you a higher interest rate because, again, they're gambling on you. They don't know if you're going to pay them back. You haven't paid all these other people back. The good part about it is that they don't do a hard pull on the credit. Okay, so you won't do that hard inquiry, nor will they report the loan on the credit file. Now, the strategy to leveraging those type of loans is that with those tribal lender loans, what you want to do is pay down your revolving debt. Okay, so if you have small revolving credit cards and stuff like that, pay down as many of those as possible. And there's a reason why I'm telling you that in terms of helping you leverage that. Now, some of the other loans that you may want to consider that has a high DTI is like with Best Egg. Best Egg offers 70%. Okay, so Best Egg offers 70%. They go up to 50,000. Another thing about Best Egg, if you have a car with equity in it, they will loan you against the equity in your car. All right. So that's why they have an advantage over these other lenders. Then, of course, like with Universal Credit, the sister to Upstart. So with Upstart, Universal Credit, using the same type of platform, again, up to 50,000. All right. Now, some people have been going through Lightstream. All right. Now, with Lightstream, owned by Truist Bank, all right, their situation is they will give you two loans. You can get approved for a loan, then you pay that loan down, then they'll let you apply for a second loan. So they'll give you two loans. The thing about it is that understanding why there's a better option for you, okay? And so that better option is this. If you're working a job, then file that W-4, okay, to file exempt so they can stop taking taxes. That's the best no interest loan you can get, okay? That's the best you can get, all right? And you do that for 3 to 4 months. That's going to give you an increase in income to pay down the debt. Now, one of the secrets that I continue to tell people is that look for credit unions. If you're going to go out after a debt consolidation loan, look for credit unions that will loan you money and you do not have to pay it back for 90 days, okay? Those are the best credit union. The reason is because they will give you the money up front for you to start paying down your debt. This is going to boost up your credit score, right? Now, one of the easiest ones to get into is State Department Federal Credit Union. Everybody can join them. And then everybody can join them. There's no restriction. You don't have to be government related, working for the government or none of that. All right. Now, the cool part about it is that they're going to use a mortgage score too. They use a mortgage score too. They use the Experian mortgage score. Okay. So that's where you get the leverage at, because with the Experian mortgage score, again, with these here credit unions, they will take into consideration if you add on an authorized user to enhance the credit score. All right. So that's the reason why I tell you that, like with certain credit unions, the leverage is when you're not expected to pay the money back right away. All right. So that's one of the best credit unions you should consider. And plus, they actually give loans up to $100,000, lines of credit up to $100,000. And that's what you really want. You want to access to that line of credit. The reason that you want access to that line of credit is because with that line of credit, you can use that line of credit and you can pay down all of your bills and dump your income into that line of credit. When you dump that income into your line of credit, that satisfies the payment for that line of credit, okay? And then you can continue using that line of credit without reapplying. The difference between that and a loan, yes, that loan with State Department Federal Credit Union, yes, it will give you up to 90 days to make your first payment. However, when you start back paying the loan, if you pay it all off, you'll end up having to reapply. Now, sometimes when you pay it off, they may give you the opportunity, and you can, there's another thing. Sometimes when you pay it off, they may give you the opportunity to increase the loan, okay, to get a larger amount, right? So that's one option. But number two is that with State Department Federal Credit Union, when you do that inquiry, okay, that will allow you to apply for multiple products. So you can get the loan, apply for the line of credit, and a credit card or a car loan. So that's another reason why I like them, because that one inquiry goes a long way. When you're going for these here lenders, these fintech lenders or whatever, that one inquiry only means just for that loan. They don't have any other products to offer you. So switching over from those loans to help pay down the debt, then switching over to the credit union to pay back that loan, that way you will have better leverage. And again, you get the State Department Federal Credit. First, you get the loan through upgrade and pay down your credit cards, right? That's going to boost up your credit score. Then joining State Department Federal Credit Union, you get a loan from them to pay back like Upgrade, Upstart, those type of loans. And because you have a 90-day threshold, 90 days before you have to pay them back, that gives you an opportunity to raise capital other places. All right. So I hope this helps you. If you have any question about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.